This is going to be a very brief review of this London session trade for today. It's just a pretty cool setup that did play out, and then I failed to observe that it had already played out and tried for a re-entry, resulting in a loss, which I then kind of revenge traded and managed to get a win following that, which is obviously not what you really want to happen. But basically got a get out of jail free card after taking a good trade, trying to get even more out of it, taking a loss, taking a revenge, and then it running back up. But I'm going to run over this really beautiful price action, but I'm going to do it on a clean chart. And yeah, just explain what we're looking at. So do a really brief top down just to show where we are at. So on the weekly, do have these relatively cool lows on the weekly, which was my initial draw. However, at the moment we are showing quite strong bullish order flow, so that's not something I want to be ignoring. So dropping down to the daily, we do have CPI today as well, as we have to keep in mind. But so on the daily, see those relatively cool lows on the weekly chart. We then have this short-term high, intermediate term high, short-term high, but then we've now broken this intermediate term high on Friday. Friday closing a very green up closing candle. Monday taking out the previous day high, then dropping down for those trailed stops. Then as you can see today, we've opened up and we failed to take out the previous day low and just ripped straight up, which was kind of indicating potential bearishness to reach down to this daily busy. And we also have this daily bullish order block down here, which I'll draw out as a new day opening gap, or just make it a box with a nice strong outline. So that's the daily CSD is at the top line, and the fact we're engineering relatively lows above that make it a good candidate for us to drop down into, even if we do continue bullish. So sure, I wanted for us to come down here, but even if we are going to be bullish, there's a good chance that we first drop into these lows and climb up. And the fact that we have this new day opening gap, daily CSD from this opening candle, and these smooth lows below it, make it a good chance for it to drop down there. So that was my initial bias going into the day. We then look over here at the 1 hour chart, and we start seeing a slightly different picture unravel. So I'm going to keep up the 5 minute on the right. You can see how we had these smooth lows down here, and this sell side, the trailed sell side from Friday. So Friday closed right here. We never took that out initially, made relatively cool lows above it. Did 1, 2, 3 drives, sold off, attacking that trailed sell side. And then that is the 1800 open, and that's the relatively cool low we made right there. Did not go a tick below the low and just started climbing up to a premium. So with the current frameworks I've been using for price, what I've been looking at, as you can see, are all these hourly opening prices. And what I want to see is when we have an hourly open, let's say this is an hourly open price, I see above that price is a premium and below as a discount. So let's say we go to a premium first, I see that as accumulating at a premium and then dropping down to discount to distribute. And then in this particular scenario, and then I'm looking at that as a fractal for the different time frames. The main focus being the 4 hour and the 1 hour time frame. So for example, you can see here the 1400 open opens up, drops to a discount. So I see that as accumulating below this 4 hour candle open. And then over here, you can see the same kind of scenario where we have 2000, we go straight to a premium. 2100 spends the majority of the time at a premium after engineering this discount sell side, and then we drop down aggressively, take out that discount sell side, and then rally. But the thing that stood out to me was the fact that 2200, a 4 hour candle open, went straight to a premium. So from this point on, I see everything as being at a premium. Not only that, we also get 2300 goes straight to a premium, at midnight also right to a premium, 1 a.m. immediately to a premium. At this point, like I'd be thinking, okay, we are at a deep premium. We're at a premium of this dealing range from the high down to the low. We don't need the hourly chart will drop down to the 15 and I'll mark out what I'm talking about. But if we look at the premium from the high up here down to the low that we made, you can see that EQ is sitting at this point here. And we're at a premium above that as well. A premium above that, premium above 1 AM as well. But then what I noticed that gave me the confidence to take this as a long setup is twofold. First of all, we have a framework, and that is, I'm just going to copy paste this, Control C. So first of all, we have this framework, and essentially what this is when we have a market maker model, such as this consolidation, reversal, and trending back up, and when we get displacement through EQ of that dealing range. So when we get that displacement through EQ, I look for second stage of a market maker model to play out from that point. And so what that entails is that we pull back down to EQ. It should be IOFD slash just a very minimal entry into a fair value gap, and then we rally from there. And that's exactly what we see here. But there is a key nuance to that, and I'll get into that later. But you can see it did play out absolutely perfectly. And that's right there. As soon as we break the high, well, this is the nuance, the caveat to it. As soon as we break the high, that confirms, okay, this is now played out. It doesn't have to continue. It could completely reverse here, and this model still played out. And that's where I went wrong today by revenge trading. Well, not only revenge trading, I tried buying here like that. So I tried buying on this drop back down after having already had a win from here. And then I revenge traded like that and closed my trade out up here. So both of those things were not valid because this model had this entire framework had already played out. So as soon as it's played out, anything extra is a bonus, but I have to be anticipating that we could easily reverse from this point, which is exactly where I went wrong today. But I'm going to go and give the other confidences for the setup because it was rather clean. Obviously, we are inside of this new week opening gap that we see here. So we're getting above that new week opening gap. And there is a very key new day opening gap that I was looking at. And if I go to the 1 hour chart, I'll be able to identify that and show you how I go about identifying such new day opening gaps. Essentially, this is a previous day high that we've recently run. So if we look at this high here, you can barely see it's next to that line, but that is a previous day high. You can see we just ran above that. It's also the previous week high, so very key liquidity pool. So I'm going to make that a dashed line. As you can see, we've just fallen short of it. There was another confluence for this trade, is that we're just fallen short of this major old liquidity level, and I expected we were likely to hit up to that. The next thing is, because we just took out this old previous day high or previous week high, what I like to do is I like to refer down to that particular new day opening gap and use that as a really key new day opening gap. So if I draw that out like so, and I do that, now I'll call this the NDOG VIP. And I like to see this act as a very key level of support or resistance after we've had a scenario where we run out a really obvious high. So in this scenario, this is the most obvious swing points that we've run out. And this is the new day opening gap that put in that swing point. And yeah. And we have the same kind of thing here where we have a previous day low, we take it out here, we can go back up, and that essentially lines up perfectly with this. Well, that is this this new day opening gap that we marked out as the daily CSD. that's the daily open from this previous day low that we clearly accumulated below and then ran it back above. And you'll be able to see on the low time frame some form of support in this area, and now potentially we could get some support here going forward, even if that looks something like that. That's also potential. But so yeah, so that's why I chose that particular new day opening gap, and that was an additional confluence for this trade. Now, the most important part of this trade that made me want to take it is based on the premium and discount ideas that are outlined in relation to the opening prices. And so, as I mentioned, I did observe that we were at a premium above 2200, a premium above 23 at midnight and 1 a.m. But one of the things that I've noticed that makes a lot of sense to do is to keep this in mind, that yeah, it could be a short, but the most salient opening prices for determining premium discount are the more recent ones and also the higher time frame ones. So in this particular scenario, we have 2 a.m. that opened up right here, and we begin a 3 drive down into the this EQ level at the midnight level. Because midnight is at a midnight is considered a discount price, so this ends up becoming a nice discount level to reach into. And then we have these radical lows, the sell side pull engineered just above that, which I'll just draw a line over just to indicate liquidity. So we've got liquidity down here. 1 a.m. opens up, entices immediately to a premium. So now we're consolidating at a premium. Traders are buying at a premium and putting their stop losses down at the steep discount level of midnight open, also above that EQ level. We then get 2 a.m. open up. Spend the majority of the time is below the 2 a.m. open, so at a discount to 2 a.m. and then doing 3 drives. So 1, 2, 3 drives below that sell side pull into that EQ level and midnight. And so when I saw the 1, 2 and saw us coming in for the 3rd drive, recognized we're below 2 a.m. open, there's a high chance we'd take out this high, because, and this the other thing is, this has been a one directional move this entire time. Just been moving in one direction. This is the first major pullback, and it's at a very key time of day where a lot of people are watching the charts. The first major pullback, it's not exactly dumping in one direction non-stop. It's giving plenty of time for people to chase the short. We fell short of this key pull, so there's a very high chance that we make a new high, and London makes the new high on the day. So all that combined gave me confidence to take a long from this area. So I'll dial down to the 1 minute real quick. As you can see, really clean 1, 2, 3 drives, which I'll delete for now. But then I'll dial a bit more into this area. So because I was looking at this new day opening gap as my key point of interest, I did recognize we had these lows here and we had just tapped below it, but I was looking for us to get a little bit closer to this. And this is one mistake that I got away with, where this is technically the first drive, but then I started counting my drives on the low time frame from 3 a.m. So obviously we've got the high time frame 1, 2, 3 drives. We've also got the low time frame 1, 2, 3 drives, which I'll put little circles around just to make it nice and obvious what I'm looking at. But 1, 2, 3 drives. I was looking at a 3 a.m. open and thinking, okay, now starting from now, I want 1, 2, 3. And so I actually waited for this low to be put in, and then it started rallying up and I was like, oh shit, what if I've missed it? No, it might come back down again. So I put my entry below the swing low, and the futures contract actually spiked down there and just tapped me in perfectly. Whereas the actual gold asset, which I don't trust the futures contracts. The futures contracts, the price action is absolutely trash, and it's not correct. Like it's sometimes it looks inverted to the actual chart. But I trust the Forex charts a lot more. And on the Forex chart, we had those 3 drives, displacement, continues accumulating below this old low. But yeah, it's essentially, I wouldn't have got my entry on this chart because I would have had my entry, my limit sitting just down here. I'll just quickly make this too thick. So yeah, at this point we did do those 3 drives. Really, anywhere below this low is a good place to accumulate position, and when I did almost miss this and I saw this bit spike up, I did consider that, okay, well, I can just get in anywhere below this low, and so I would have still got my entry here, obviously. So at this point I'm in the position, we have this rally up, this is EQ of this drop down, and I was watching this area thinking, okay, well, should I take partial here or not? I decided not to, simply because I was fairly confident in this trade. Clear accumulation below 2 AM, 3 drives, being that accumulation pattern that confirms it. We had EQ have an aggressive drop back down. This initially did scare me a bit. It didn't scare me out, but it did scare me a bit. And I was watching the midpoint of this wick drop below that, and I'm thinking, shit, it's coming pretty deep. But I remembered that after accumulating in an area, we can return to that previous area of accumulation. And also, when we have a swing point that we accumulated below, one of a really strong signature is when we do return down and we swoop back below that old low, which is another framework that's separate and a potential entry model that I like to see. So when I saw us dip down, hit that, and get this strong rejection up there, at this point here, I started getting really confident in the trade again, and and rode it all the way up into here. Took partials as we hit all these buy side pulls, and I took partials up here, then added back on down here, and then closed up here. A lot of entries and exits, which I will show, and obviously if I just held the whole position, it'd be better. But yeah, overall it's a really cool trade. And I really like the narrative of this being the framework of the displacement through EQ, us returning down to EQ, and at midnight level, the sell side engineered above the discount midnight level, and then 1 AM enticing to a premium, and then us doing 3 drives below the 2 AM open, with 3 AM opening had a deep discount, taking out the previous hourly candle low, and then climbing up. With this particular framework, as I mentioned, completion of second stage is when we do break this high. So as soon as we break this high, ideally with this framework, I want to develop it to the point where I have the confidence to hold all the way to make a new high for my position each time, because it seems to have that consistency if I identify it correctly. But once we do have that high, you want to go at break even at least, and looking to potentially not being ultra cautious with adding. The reason why I added on the way back down is because we hadn't quite tapped that previous week high yet, which I wanted us to hit. And then I saw, okay, well, if this is accumulation, 1, 2, 3 drives, if this is a previous area of accumulation, then that makes this technically an order block. So I want to see us drop down into this previous area of accumulation for a long. I then saw how we had this, the 2 AM open price. We also have this as an order block. And I figured, okay, well, I'll draw out EQ of the dealing range from the high to the low. That's my absolute minimum entry. It fits nicely with the sell side here. We have mean threshold of this 2 AM order block sitting at about this level. And just above that, we have this here, which if we look at the 5 minutes, kind of stood out to me as an interesting looking area. You have this wickless candle, multiple wickless candles next to each other, so just sitting in that area there. So I figured that, well, I'll get long here, I'll add to the long in here, and then when it dropped down, I ended up getting stopped out right at the low. So definitely wasn't very specific with my risk management. Ideally, the stop loss should have been at least, at the worst case, the most deep discount below this inefficiency, which would be this order block. And then as soon as it took me out, I, without much context, just thought I'd jump back in, walked away from the computer, left a take profit sitting up in this area of the range, and a stop loss sitting just down here. And as I was away from the computer, I remembered that once we have this this framework displacement through EQ, as soon as we make a new high, that completes the framework. And I just entered again after we had this aggressive sell-off. So I figured that, okay, well, I'm probably going to take another loss. This is not good. I shouldn't have done that. I was already, at this point, I was back at break even on the day after having been up 180 on this trade. On this long, got 180, and then I lost it all on this drop down with getting back in here. And I figured that now I'm going to be down because, this isn't going to work out this long, which I don't think it will, honestly. But yeah, it's not going to work out because I shouldn't even be in it. And when I got back to the computer, I was ready to either have taken a loss or just close out the position, but it had run up and hit my take profit, which is where I got lucky today, essentially. So you can see how I started writing things out. This is a discount because we have this sell side pull engineered at midnight, which is a discount level if we're above it. 1 a.m. enticed to a premium, entire time spent above the 1 a.m. open. And then 3 drives below the 1 a.m. price, 1, 2, 3 drives, and a discount to 2 a.m. And that's a clear signature of accumulation. And then this being a really nice key nuance of the soup at old low, so the clear liquidity pool that we engineered and enticed away from, and then a drop down to accumulate below. Once we displace back above that and we come back down, that sharp projection right there is really key, and then we displace back up through this EQ level and head up into buy side. So now I'm going to show the executions. As you can see, I'm up 159 currently after having been down back at break even. So just a little bit lower than my equity high for the day, but I'm going to go turn on executions. Just a quick warning, it is not pretty. I'll zoom in a bit as well, just so that's easier to read. So executions. So these are the executions. Let's see if I can zoom in even more, because I'm not sure what the quality is like once the video is recorded. Alright, so this is the same thing. As you can see, the price action looks slightly different with that wick that got me my entry, literally to the tick. That was my entry at 66, and that's the low. So kind of got lucky on that one, but 1, 2, 3 drives, really obvious on both time frames. I did initially get a little bit long here because we did take out this low, and I was looking for 1, 2, 3 drives. But then I mitigated for just a paper cut there because I figured it's just pure impatience trying to get in above this low, thinking that I missed it when it's more than likely going to take down. Like the chances of it coming back down and making a lower low was very high, so there's no point to be buying up here. So I got back out of that one, which is a good thing to get out. Then got that entry down here, didn't take any profit up there. As it started pulling back down into this wick, added to the position. I then added once more as we tapped into that old swing low, and then we got this reaction up. But before I recognized that that was a really nice reaction we got when we did soup below this old swing low, I did recognize that and we got this nice reaction back up, I was thinking I was still, a bit unsure about it. So I took off the ads that I put on down here. I took it off at a small profit. And then when we continued climbing, I started realizing, this is actually looking really good. I actually wanted to add in this area, and I had a limit buy sitting at this bullish order block, which was never hit on the Forex. And as I mentioned, I focus on the Forex chart. So that's this order block right here. That's what I focus on for looking for what I'm actually reading price on. And I was waiting for this to drop down and hit this order block, and I was going to add to the position right there at EQ and at this bullish order block, but we never dropped down there. So just although it looks like it dropped down in here, I was ready to add right there, but I was waiting for the Forex chart to hit, which would have potentially got me an entry more like down here. So I didn't want to just buy here and then the Forex chart drops and this drops down to here. But I was going to add back in, which is why I took these partials up here at a premium of the range. Nice deep premium, likely to have a bounce because we've just filled this inefficiency. And I was going to add back in, didn't quite get that unfortunately. And then took the last 3 positions off as we ran up above these highs and above this high. Because I'd taken off my last piece, which I was actually planning on holding higher, just because I could tell that I was running out of steam, we're hitting a lot of buy side pulls. So I looked to add that back on below this 2 AM opening price, which is about here actually, and got a fill right there, so just a tick above the low, and then rose that up and closed that out at 3.6. So just at the midpoint between this high and ERL is where I closed that out, which worked out really nicely. Then as you can see, we drop back down, and this is where my executions get a bit ugly. And at this point I was up quite nicely on the day, like 180 is pretty good for a start, especially ahead of CPI during the London session. So I bought here initially. This was valid on this chart. We would have been about here, so below this EQ level. So that was my initial entry, and then I added 2 more at 69.4. So right there, and that was as we dropped below this sell side here. As you can see, it doesn't quite line up, but on this particular candle, that's where I added, and we were below the sell side pull. So I was watching this chart. Then as we sell off, I got stopped out at 67.5, and then so I had 9. I'm not even sure what this all is, but anyway, about here. A little bit lower actually, because with the 6 contracts it's 7.1, so it's more like that, or even that. So got stopped out there, and then I ended up jumping back in with some down at the lows, so 67 about there, and also 65.6. So that's essentially what it was, and then obviously we've got the exit sitting up here, 70.8. So yeah, sure, it's fine to attempt this if I'm like, okay, previous era of accumulation, we're dropping to reaccumulate that mean threshold. Stop out, I think on this chart, the stop out order was actually all the way down here. So my stop out should have actually been at mean threshold of this order block. So using the 15-minute order block from there down to the low, stop out should have been below this. And really, I'd say below this candle low with this inefficiency, just below the mean threshold. So the stop loss should have been sitting around about here. And that would have been ideal. That could have saved me a significant amount, because that would have stopped me out at 4:20 AM, which is this candle right here, which is where I did get stopped out, it looks like. But still, I feel like I could have definitely gotten out a lot sooner than I did. So I'm pretty sure it was, yeah, it felt like I held on to it longer anyway. And then obviously jumping straight back in, sure, I had a stop loss and down below here. There was the confluence, of course, of this new day opening gap with a pull engineered just above it, which is a good point. If you're going to do a soup, that is the place to do a soup, is below a sell side pull that's been engineered at a new day opening gap. But still, it wasn't my trade. It's really just gambling at that point. I should have avoided that. So I'm lucky to be back up on the day after having been back at break even, and that could have easily been, negative 100 as well. So if we look at the quick equity curve, you can see taking a few nice wins after that initial paper cut, and then rapidly giving it all back, and then running back up and just coming back up nice and fast. I do have my max loss set to 300. I usually have it at 500, but I think especially with being up on the day already, there's no need for it to go to negative 500 from being up. So keeping it how it is for now, and yeah, we're going to be ultra patient from now on today, just really waiting for either a short or a long. I'm not convinced either way, to be honest. I'm more leaning towards the short side, but at the same time, this just looks like the type of scenario where it's just going to go straight up. Like it just looks like that kind of scenario. So if I do get a short, it will be after it's really confirmed it and potentially begun to break back down. Then we can look for these smooth lows to be taken out into that daily order block, and also with the confluence of that 2200 level being held at a premium, and overnight all these candles being held at a premium. So that's what I'm going to be looking for. Just see if we do have willingness to make another high, and if we can show weakness and begin to break back down, look for a short. But we do have CPI, as I mentioned, coming up, so I'll look for that. So yeah, that'll do for this trade review for the gold displacement through EQ framework long from this lovely Tuesday.